Everyone, and welcome to another Altos Trading live strategy session with Jeff Tompkins. This is your host, Richard Van Rich, and we have Craig Ward with us tonight in the chat. We're really excited to have you guys with us here tonight. It's been a couple of weeks since we've seen you. We've missed you. We're glad you're here, and we can't wait to see what's going on in the market. If this is your first time on, you'll notice your microphones are muted. That's so we can hear Jeff and I talk. But if you have your mouse around, you'll find at the bottom a chat screen and a Q&A section where if you click on that, put questions in there, we'll get to those throughout the session, and also before we sign off at the end. If you have to hop off for any reason, don't worry. This is recorded and will be available in the members area later tonight and also sometime in the next coming days on YouTube. And if you're catching us on YouTube, please like and subscribe so you can catch all of our videos as we're doing these on a weekly basis. If you have any questions about your account, access to Trade Trend, Zillion, any questions about any open trade alerts, billing questions, things like that, email support@altostrading.com and we'll get to those sometime tomorrow. So before I bring on Jeff, let me just read through the disclaimer. Altos Trading LLC and Trade Trend Zillion software is intended to be used as an information service for subscribers, and it includes opinions as a buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading, Trade Trend Zillion softwares are not brokers or investment advisors, do not provide investment advice or recommendations directed to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software and subscribers to the Trade Trend Zillion software. Any other persons who buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right, out of the way, let me bring on Jeff. Jeff, you there?
I am here. Welcome.
Man, it's been a while.
Yeah, feels like we're starting from scratch.
It really does.
Yeah, it's been what, three weeks since we last met?
I think we skipped two in a row.
Yeah. So I haven't seen you all for a few weeks, and I've had some travel last couple of weeks, so apologize we weren't able to make the meeting work out the last couple of weeks, but we're back and better than ever with lots of good stuff to cover. A lot of important things going on right now in the markets that we're going to focus on tonight, including our market overview and key levels to keep an eye on for this week and the coming weeks. And as we have just wrapped up July, the month of July, we'll also be taking a look at where the S&P ended on the monthly chart as it relates to the 36-month moving average. And tonight's strategy topic is one that we've covered in the past, and I think greatly deserves to be built on, which is what we'll do tonight, and that is combining a trend and momentum with divergence. So we're going to be looking at two specific trend/momentum and divergence indicators that are really a powerful combination and tool to add to our trading arsenal. So that's going to be our strategy topic tonight, and we'll leave some time for ticker roundtable tonight for sure. So get your tickers ready. Anything you guys want to look at, we will do that tonight, followed by Q&A. But if you have any questions, of course, as Richard mentioned during the session, please feel free to type those in either the chat or the Q&A box, whichever is more convenient for you. All right, so what's going on in the markets this week? Well, we're in the midst of earnings season. We're probably somewhere about halfway through, maybe a little more than halfway through this current round of quarterly earnings. Now, what's interesting, obviously, markets have the bullishness in the markets has continued. We've seen over the past week or so, a couple weeks, a bit of a sideways market, a decrease in volatility. So things are kind of like a little bit boring right now, just to be honest, but there's still a lot of opportunity and important things on the horizon. So what's interesting is that I think somewhere like over 80% of the S&P companies that have already reported their quarterly earnings are the results have been positive. So there's been a lot of earnings beats. And that's really helped, you know, keep, markets afloat, really keep this bullish momentum intact, on top of, the optimism around decreasing inflation. So those are kind of the fundamental things that are happening right now in U.S. markets. Right now, futures are down a bit. And I just was looking at in an article that is pinpointing a downgrade by Fitch, which gives ratings of company quarterly earnings, etc. But they've downgraded the U.S. long-term ratings, and traders are, kind of starting to take that into consideration on a more of a short-term basis. So that's why futures are down after the closing bell today. So they were looking at long-term foreign currency default ratings and some other metrics, but we're still getting some strong earnings coming in this week. So that's positive for the market. Now, the other thing, though, is that there's not, outside of quarterly earnings, there aren't a lot of other bullish catalysts on the horizon. So as we look at the technical levels here momentarily, we want to keep that in the back of our mind, that what's on the horizon that's really going to push markets higher or lower. And so there's not a lot right now. And so again, we're more than halfway through quarterly earnings, so we've still got a decent amount left. And that's really our catalyst. So let's look at the S&P 500 and the critical levels that we want to keep an eye on. We've, as we've seen a bit, actually, let me refresh this. I don't think it has the, as we've seen markets rise recently in the last couple of months, we've rotated into a significant resistance zone. Just make sure I got, no, I still don't have today's, but that's okay. We'll refresh it here in a second. I just mainly want to look at the resistance level. Let's see, get my drawing tool up here. All right, so there's a few kind of we'll call it a zone, resistance area that I'm watching. And the top of that range is right around 4650 on the S&P. And you'll notice as we look at like the current sideways price action, it's wedged in between this resistance zone. So it runs, roughly, not exact, but we're just going to give it 100-point range from about 4550 to 4650. So this is a resistance zone that I'm watching closely. Okay. Now, there's some more nuanced levels in here. Like if you look at some of these other significant pivot points within this resistance range, we're seeing, markets kind of play around with that area as well. But these are the big ones, because the run up earlier in the year in the S&P that was or earlier last year, sorry, not this year, but earlier in 2022, when S&P got up around this 4650 level, there was a really significant sell-off there. And so that's why I'm really paying close attention. And here, back in late 2021, we had a decent sell-off from the zone as well. But there's been, we'll call it 4 since late 2021, strong sell-offs from this resistance zone. And so now we're up in this zone. And while this is a resistance zone, what I want to emphasize is this lower range of the resistance zone is currently short-term support, right? Because if we look at the current price action, and I'll refresh this again, but today S&P closed at 45.76. So we're still above 45.50. So that's the level I'm watching, like short-term support, even though this on a longer term basis is a resistance zone. So there's some support in here. So what do we want to, how do we want to use this information? Well, eventually we're going to break out of this 45.50 to 46.50 zone, right? And depending on which direction we go, I think there's a strong probability we're going to continue in that direction. So I think if we break 46.50, we're probably looking at a move, another 100-point move to the upside into roughly 47.50. If we break to the downside, 45.50, we do have some dynamic support here around 4,500 at the center band. And then if that were to break, you know, we've got lower levels of support, which I think it's less likely we're going to get down into, like 43.50 to 4,400. All right, so that's and notice that currently the lower dynamic support, the 2 standard deviation blue band here, closely coincides with the static support level of 4,400. So those are some areas to watch if we get a break to the downside. So that's what I'm keeping an eye on this week. Are we even going to get out of the zone this week? We'll see. And if we do, which direction are we going to go? And once that's determined, I think the greater likelihood is that we're going to continue in that either direction till we either encounter support on a downside break or resistance on an upside break. So those are the key levels to watch really for this week on S&P. And as we look at the monthly chart, which I'll get over to here, I think I need to change this. So let's get over to S&P. So as we look at the monthly chart, this is, you know, more medium to long term. Let's go to our moving average, and we're going to adjust this to a 36 period moving average. And we're going to switch over to a monthly time frame. I think we don't have it there. So we'll do 15 years and month. Okay. So looking at the monthly chart of the S&P, as we talked about earlier in July, and even prior to that, as we periodically analyze this monthly chart, I mentioned that if we break through the highest from the earlier 2022 monthly candles, that to expect an acceleration of the positive momentum. And so that's what we've witnessed, right? So we got the breakout here in June. We have a bullish month in July on strong momentum. So what am I looking at here? Well, I'm looking at closes at the end of each month. You know, are we closing near the monthly highs? And so far on this resistance breakout, we have been. So again, we just map these on the daily chart, but this is really what I was watching. We're just now looking at it on a monthly candle, this resistance area. So again, right around kind of 46.50. But it was that zone that we mapped, right? 45.50 to 46.50. And as we look on a monthly chart, look at this major resistance from 3 consecutive monthly candles. So that's what we need to break through right now. And that's that resistance zone from the daily chart. And if that happens, then we're likely going to test previous all-time highs on the S&P. Maybe not all the way up to 48.1862, but close, maybe or maybe we blow through it. But this, to me, seems the more likely medium to long-term direction. And that's because we've finally rotated and broken through resistance, rotated off the 36-month moving average and broken through strong monthly resistance. Okay, so on a medium to long-term basis, it looks like, when we compare it to past tests of dynamic 36-period support on the monthly chart, we've tested, we've had an extended test of that dynamic support, obviously, but it's been tested and it's now finally, following the bear market that we were in last year, rotated off that. And again, when that starts to gain steam and happens, that's typically indicative of more of a medium to long-term uptrend in the major indices. All right, so let's now take a look at the NASDAQ 100 and see where those key levels are. And we'll look at the Qs here. See where the key NASDAQ levels are, because we're again, like the S&P, sandwiched between support and resistance, short-term support and resistance with longer-term resistance zone. So let's mark this. Level that is right around 385 on the Qs as our resistance, and then right around 375. Again, it's a similar range as the S&P, being the Qs. It's smaller on a nominal basis, so about a 10-point range here. Okay, so this again on a medium to longer term basis is a resistance zone, like we saw on the S&P. And if we look here on a shorter term look back basis, we've got some support here at the bottom of the medium to longer term resistance zone. So just like with the S&P, I'm looking for a break to the upside or the downside. So I expect, especially if the remainder of the quarterly earnings that are due out in the coming weeks don't continue to be as strong as they have been so far, we might see a little bit of a pullback or a continuation of this consolidation in the resistance range. But more medium to long term, it looks like as long as you can break this resistance zone to the upside, that that's going to be the longer term direction. But to sum it all up, I'm exercising in terms of like bullish directional trades, extra caution right now, just because of where things are, the significance of the run up this year so far. So this is where we started 2023 on the NASDAQ 100, right? And that's we were down here around 250 to 260, and now we're 120 points higher. That's a big run up, right? In this year so far. And as the summer months, we kind of approach the end of summer, and that transition between end of summer and start of fall, we tend to see markets kind of go a little bit quieter. And so that's why I'm saying I'm exercising caution on bullish bias trades, because I think that we're kind of run out of steam after this big run up that we've seen this year. So then lastly, let's look at the VIX. And VIX has remained at low levels for much longer than we've seen in previous years. Zoom in here. Okay, so VIX is just kind of, stuck in this range, like 1250 to 1550. It's kind of stuck in this 3-point range, not doing a whole lot. And again, what I'm watching for is a break of the lower range of those levels we just looked at on the Qs and the S&P, coinciding with a spike in the VIX outside of this support range. So this is a support range. And if there's enough volatility or implied volatility to spike the VIX out of this range that it's stuck in, while the S&P and NASDAQ break those support areas, then those might make for good short-term bearish plays for me. Whereas if VIX remains in this range or even moves lower, and S&P and NASDAQ break through the resistance, then I might resume more bullish bias positions. But right now I'm more market neutral. So currently I'm personally utilizing more market neutral strategies, selling premium at low deltas on both the put and the call side. That can be done with like iron condors or straddles, so those are the strategies that I'm currently implementing that are working pretty well in this kind of flatter market up near these resistance zones. All right, so those are our key levels for this week, and how they relate to what the VIX, the CBOE volatility index, is doing. So we can pause there and see if there are any questions.
Have you ever seen the VIX be this low, this long?
Oh yeah, certainly. I mean, it's not like it's the VIX has been much lower actually in past years, and stayed down low for quite some time. But as it relates to, I mean, let's just say go back to the COVID crash. So if we look at back here, because VIX was very low, obviously, before the COVID crash, where we got this huge VIX spike back in early 2020. So look where the VIX, I mean, the VIX had a lower range of support around 1150 to 12. So we haven't even gotten back down since this COVID crash in early 2020. We have not reached the lows that we saw prior to that back in 2019 ever since then. So you can see back here in 2019, as we were either known or unknown to people approaching the end of the secular bull market, that's where the VIX was trading.
Steven's asking, based on the levels, has it tickled you a little bit to try to buy any calls on them yet?
I don't have any VIX positions on right now, and I'm not tempted to buy any VIX calls. I normally do vertical call debit spreads on the VIX, but in order for me to do those, we did, by the way, get a buy signal on July 27th on the VIX, but no trigger yet, because VIX would have to spike above the forecasted signal here from July 27th. That high was 1502. So I would want to see VIX break through this range that we just mapped out in order to, and not just that, but also see the S&P break to the downside through that support. Then I would that would be enough for me to look at putting on a VIX debit spread, so a bullish vertical debit spread on the VIX, which of course would be a bearish outlook on the markets, the S&P.
Gotcha. Let's see. Bill's saying in the past, trade trend and other things have talked about calling the top of the market before crashes. Is there any sort of moving average help or something to look at that just helps you to say, okay, this is going to be the top? Or
yeah, well, the 36-month moving average is when I look at the levels that we mapped out, or what I look at. And then, as we're about to get into, trend reversal indicators and divergence. So actually, that's a great segue question to tonight's topic. But I look for all of those. I look for a confluence of all of those for them to combine. So, I mean, what I mean by that is, let me actually get back to the S&P. So if we get, you know, a sell signal, what is the context of that signal? Or if we get a buy signal, what is the context of that signal? Just let's look at the two most recent triggered buy and sells on the S&P. So if we did our homework, we mapped everything out, right? Let me just do that. We know where our levels are. Well, there's a very strong support level right around 43.25. We've previously mapped this out on a past weekly session, but you can see that there was very strong support and resistance from the past. And at the time this sell signal came in June, this was a support level because price was above it, right? So this sell signal, although you know, a profitable one, didn't make a huge run because of this level of support, right? So it was good for, you know, a little counter trend trade, but had I done my homework and mapped this out, I would be looking at three things: my levels. So I would have known about this 43.25 support level prior. And if I take a short-term sell signal, I want to be aware of a potential reversal there. Well, and now in hindsight, we can see that obviously occurred. And divergence, right? Is there momentum divergence? Well, although this is a sell signal, and although it was a successful sell signal, right, didn't make much on the trailing stop. It made about a 100-point move off the entry to the area where it reversed off support. There was bullish divergence going on at the time. How do I know that? Well, we have a green bullish divergence cloud. So I'm taking a contradictory trend or momentum reversal that, you know, again, is contradicting a bullish divergence. So I'm taking a sell counter trend signal into bullish divergence. Now that's a static support level. There's also a dynamic support here. Notice that price, the 20 period average price coincided almost perfectly with the 43.25 static support. And by no coincidence, on this counter trend, retracement, we saw a reversal and rotation back to the upside off of it. So long story short, what is the context of the signal, right? In what context is it occurring? Well, that just painted the full picture of the context of what's occurring on a technical basis, not obviously accounting for fundamentals. Now, looking at the buy signal, okay, that ultimately triggered, right? This one ran quite a bit more than the counter trend. So why is that? Well, more factors lined up, right? So now we're taking buy signal that coincides with bullish divergence. So we're bullish instead of bearish bullish. We're trading with the momentum. We're not trading. We traded this, or we didn't trade this, but the signal was following a support rebound and a resistance breakout. And while this was happening, VIX was staying below resistance. So see how these all line up. And while there are no guarantees or certainties in trading, it's all about edge and probabilities. So there's a greater probability when all of these things line up that you're going to get a more sustained directional move. And that's basically what we see on these prior two signals on the S&P, although they were conflicting and they were both technically successful signals. The one where all the variables lined up, divergence trend and momentum, direction, support and resistance, and the VIX obviously being below resistance, resulted in that signal creating a more sustained, significant directional move than the counter trend, where all those things didn't line up at the time, but still not necessarily a bad signal. We just need to be aware of that. So you'll see as we look tonight that it's really critical that we look at all of these, reversal signals, divergence, and everything in the context of the current market, because not every signal is created equal. So to kind of go back to that question, there are no major medium to long-term red flags on the market on a technical basis. I'm not saying on a fundamental basis, a whole nother story. On a technical basis, in terms of sell signals, we don't have a triggered sell signal currently. But if one were to come in and we got a trigger, we're still in bullish divergence on the S&P. We're still in a strong uptrend. Then I'd be, potentially looking for some sort of a retracement, But then if we break support and selling pressure accelerates, then, that's where I'm looking at these support levels. But right now, I'm not seeing, a whole lot of bearishness. But look here back from before we went into bear market in 2022. See how the markets were topping out up here on the left side of the chart, and we were getting consecutive sell signals off this major area of resistance. When I start seeing markets getting toppy like this, and we're getting 2, 3, 4 plus sell signals around that level, that's where I really would be concerned. But in the broader context, like I said, so back here in late 2021, we've already been in a 10 plus year secular bull market. That's going to create risk with all it takes is the catalyst, right? Like high inflation and markets crash. Also what occurred here is the transition from bullish to bearish divergence. So see how we were in bullish divergence, in late 2021, and then we were in transition to bearish divergence. So when you see that transition, when prices are getting toppy and we're getting consecutive sell signals, that's what we look for. Okay, so notice how these sell signals, this is faint and hard to see, but there was a little bit of bullish divergence in here between these two more prominent red clouds. When we see bullish to bearish divergence transition, like we did here, see, we haven't seen it yet in this 2023 run-up. There hasn't been any bearish divergence. But when we see it back in 2022, those are the major sell-offs. When we see those sell signals coincide with the bullish to bearish divergence transition. Any other questions there?
Yeah, statement was right on time because Tom had a question about the relative strength divergence, and you kind of hammered it right there at the end.
Okay, yeah.
That's all I got.
Yeah. So okay. So what I wanted to do is I was run some scans here and see kind of what's going on in terms of divergence and trend. I think this is a good time to do this because of the levels we are at in the market, and there being a degree of a greater likelihood of some, at least short-term retracement back down. So if I'm going to actually take out forex and take out futures. Let me actually refresh this too, because by the way, we're still in the process of switching data brokers. So as the team works on that, some of the some of the assets and markets take a little bit longer to update yet, so we haven't gotten an update on the S&P yet. Should be coming in here shortly. So let's see what the scanner gives us. So I took out FX futures. All right, and let's go ahead and look for pending sells. Actually, let's do pending sells. And bearish divergence. All right. So we don't, geez, we only got, I just scanned 5,317 symbols, and we've only got 4. I only came up with 4 that had pending sells and bearish divergence. We could look at, just out of curiosity, let's see what are triggered. Yes, we have a lot more triggered. Let me go back to pending. And again, these may have triggered because the data is currently updating, so it's not fully updated yet. Let's see, Atlantic, Emer, National Vision, MNF, and okay. Let's take a look here. So it looks like this one did update. Yeah, this one's updated for August 1st. Okay, so all right, so this is Atlantic American. So there's a pending sell. I mean, this stock is like, it probably isn't very heavily traded, but and it's only trading on the close at $1.77. But just give you an example. I mean, there's a pending sell here in bearish divergence, right? So they align, but the problem is, those things coincide. If we look at, again, the market structure at the bottom of a move, right? Not on a pullback into resistance. So if we're shorting, if we're bearish, the better signals tend to be pullbacks to the upside into a resistance, right? But now this is at the bottom, so not a real strong signal for me. Let's look at MNF Bank Corp. Oops. Okay, kind of similar thing here, but difference being, if you've joined our prior sessions on volatility expansion, there was volatility contraction here, and we're getting expansion, right? And potentially a break of support. But like on this one, there's strong support at right around $18 a share. There's a pending sell signal, entry below the candle. So if this volatility expansion continues, and it looks like it's that's the most likely potential outcome here, this one could be good for, you know, a move down into lower support. I'm seeing strong support around 15, so that's like a 3.1. That's a huge percentage move off, you know, an $18 stock. So this one, although it's you see the volatility expansion from today, I'd have to look, but this might be earnings related. Qualifies, right? So it's bearish divergence, volatility expansion. The sell signal came off of resistance. To see how this differs from the one we previously looked at. So we've got strong resistance at this roughly 20 to 2050 level, right? And came off of that. Made a big intraday move. The stock went down over 10%, almost 11% today, right? So if we look at, oh, sorry, this one's not July or August 1st. This is from July 1st. So I don't have this one didn't update yet. So actually I'd be curious to see, let me look on my other monitor here, what this one did. MFBP. All right, so this, I'm just looking on my other monitor, low of 18. Yeah, so it hasn't, clear this out. Yeah, pending entries 1784. So it hasn't hit the entry price yet. We got a little bit of a kind of inside candle today after the July 31st sell-off on Monday. So I actually like this signal. If we can get down into suggested entry, it's 1784. I think MNF might be a good bearish play if we follow through into the suggested entry. But that's what I'm looking for these things to line up, right? Support, static and dynamic support and resistance, bearish divergence in coinciding with sell trend or momentum signal, or all vice versa, right? Bullish divergence with the buy signal in bullish or trend and momentum reversal right off support. So those are the kind of the main technical things I'm looking at. And you'll again see, as I pointed out previously, when those things line up, you tend to get the more sustained moves. So let's just go back to MNF real quick. If we look at this period back in March, what happened here? Well, we had a big run up. We had bullish divergence. You can see the cloud, but we had a transition from bullish to bearish. So see how we go from green to red cloud. We get a sell signal, right? We already had the volatility expansion. This is a beautiful sell signal. Okay, because everything lined up, right? I'd have to zoom out a little bit further to look at the static resistance. Oops, wrong button there. This might be an interesting case. There may be no static resistance, in which case, if there's an absence of static support or resistance, we defer to dynamic, which is our outer 2 standard deviation band. It doesn't look like this stock was ever up there before, at least not going back several years. So this is where we use the slingshot. You know, if there's an absence of static resistance or static support to the downside, we defer to dynamic. Okay, so see how price trailed the outer 2 standard deviation band, the upper band. So it's at dynamic resistance. It's transition from bullish to bearish divergence. It's sell signal, right? So trend momentum shift from bullish to bearish, and beautiful move down. All right. Cool. So any questions on kind of getting those variables to line up to look for the more sustained moves? Oh, what I was going to point out is, so it tends to be the, again, like we looked at, like on the S&P, just know whether you're trading trend or counter trend. Because here was a sell signal. It looks like just a tiny little profit here on the trailing stop. It was good for a, several point move down. But see the difference here between this sell signal that's in bullish divergence and this buy signal that's in bullish divergence, where they actually line up. See the difference in the magnitude of the move. So if the take home message, if you're conflicting bullish and bearish divergence with buy and sell signals respectively, then you're trading counter trend and you're less likely to get sustained directional moves. And that isn't good or bad necessarily. It's just an awareness we need to have when we structure a strategy or trade around that for expectation. So yeah, any questions on those?
Looks like nothing's come through.
Okay. All right. Well, I want to go ahead and, now that we kind of have that in mind, in the powerful combination of divergence and trend shifts or buy and sell signals from our trade trend algorithm, let's go ahead and open it up to Ticker Roundtable, and we can kind of take a look at some of these variables together.
Barbara asked earlier for TLT.
Okay. Let me... All right, so looking at TLT. So TLT is the 20-year Treasury bond ETF. Often with TLT, you'll see it range for a significant period of time, then have a very big, strong directional move, right? It's the nature of the market. And Right now, it's in a very well-defined range. So when we look at this support resistance range on TLT, in terms of proximity, price is near the lower support level. Okay. So I don't see any strong or any actually bullish or bearish divergence. Now, there is an open sell signal. Okay, so entry would have been below this candle. Okay, so let me actually just see what the entry was on this open sell signal. 170. Okay. So there's like 65 handles in the money. And it made a move down into this support area. Looks like the lower end, well, it would have just been this July 27th candle, 98.91. So since the sell signal came in, it hit a low of 98.91. I don't know what it did today. Let me look here. Looks like it went down to 98.14 on the low today. Okay. So it did break. All right, so we broke support on today's close. So this sell signal, now that it's broken support, I think probably has some room to run. However, keep an eye on, so once support breaks, it becomes resistance. So that helps us navigate pullbacks in a trend. Right? So if we're in a sell signal like this one in TLT, support breaks and it rebounds, it's likely going to rebound into the prior support that is now transitioned to resistance. And then we can structure our trade management and any subsequent trades that we do on TLT, whether it be adding to an open position or initiating a new position off of that level. Okay, so yeah, now that support's broken on TLT on today's close 98.14, this one's got some potentially got some room to run because we've taken out these lows from late 2022, March 2023, etc. So we've broken this SR range to the downside. And then if we look at more medium to long-term support, I'd be really watching this 92 to 94 zone. Probably should actually draw that as a zone. Okay, and these were lows from back in October, November 2022. So this is going to be major support if TLT, in fact, rotates down into that level. All right, let's take another.
Steven, let's see, Zion.
Got a couple branches, Zion branches in my neck of the woods. All right. Okay, so here we have a triggered sell. Let's see, did we get, okay, we did get data updates rolled out on Zion. So this is triggered as of today. So yesterday, the 31st, the pending buy came in. Now remember, this is counter trend, right? This is actually a great one to look at. So thanks for recommending it. So buy signal came in yesterday. So counter trend, right? So what am I looking for? Well, it's also not in a green divergence cloud in trend direction, right? So that doesn't mean it can't be a great trade. It just means that I'm not going to expect quite such a sustained directional move. So there's, looks like critical support right around 33. That also coincides with that static support, with dynamic support closely coincides with our center mean band. This might be a good pullback, So if I structured a bearish trade around this, again, this isn't my higher probability trade because all of the variables don't line up. But if I structured a bearish trade around this sell signal, this is level is what I would use to manage the trade, whether it's a profit target level, a scaling out level, whatever. But this is counter trend. So sell signal in bullish divergence, okay, and upward momentum. So see how our volatility bands and our average band are all pointing up, price is moving up. So this is one of the common questions we get is, how do you tell the difference between like a pullback, a potential pullback or retracement within a trend and a trend reversal? This is how I do it. And it's not going to tell us 100% of the time, because eventually you're going to get a full trend reversal when a trend ends, right? But during the trend, you're going to be right most of the time if you analyze it that way. The only time you're going to be wrong is when the trend fully reverses. And when I apply this, it's very accurate. It's highly accurate in trading within trends, whether it's counter trend, retracement, or trend continuation. So this is a critical level for me to watch whether I'm bullish or bearish. So in the case of the bearish signal, this is the pullback, potential pullback level. Now, what could also happen? Obviously, we're not there yet, but what if price does come down there and reverses? And what if we get a buy signal? That would be assuming the bullish divergence continues, right? So the green cloud continues, the bullish divergence continues. We get a buy signal. We get it off both static. So that's looks like it's closer to 34, and dynamic support, our center band. That's going to be my higher probability trade in terms of trend strength and momentum. So what does that mean? Well, it means if I'm taking this sell signal and I'm structuring a trade plan, I don't want to structure one that would require a very strong sustained directional move. Yeah, it might happen, but it's not as likely. Whereas if we get a pullback into this level of support, a reversal to the upside, and a subsequent buy signal, then when I'm structuring my trade plan and building a trade around that, if it does occur, I can build it appropriately, because I know that bullish divergence, bullish buy signal, statics, rotation higher off of following a retracement off of static support and dynamic support is going to give me a greater likelihood of a sustained directional move. Okay. And if we look at resistance, I mean, going back to 2022, if we do make a bullish reversal off this, roughly 34 level, there's a lot of room to run until we come up into significant resistance. It's all the way up like in the 46 to 48 zone. That's a huge percentage move. So not saying that obviously is guaranteed to happen, but it has the potential if it plays out that way and all those variables line up. So this is a cool one to look at. Again, we're keep in mind, caveat being, we're ignoring all fundamentals here. So we're in the midst of high levels of inflation, rising interest rates. So always take the fundamental variables into account as well. This is a banking stock, right? Zions Bank Corp. How might fundamentals impact all of this? But ultimately, the price action really tells us, we're not, when we place trades, we're not trading the economy. We're trading the stock. We're trading the price action of the stock. But still important to keep those in mind.
Keeping on the banking trend, I want to see BAC.
Yeah. So Bank of America, we're probably going to see similar type of price action. Yep. Sure enough. Let me expand this. Right. So there's really not much different to say here. The levels are going to be different, but similar context, right? We have the volatility expansion. We got a counter trend sell signal. It's in bullish divergence. The levels are just going to be different, right? So there's strong static support around 30, but there's also static support that closely coincides with the center dynamic support. So I really have nothing different to say here other than, all the prices and levels are a bit different.
All right, let's see. Ed wants to see PLTR.
All right. See what we got. All right, so this one is updated. It looks like our updates are coming through, maybe hopefully completed. Yeah, so PLTR buy signal yesterday, July 31st, got a trigger today. So what we've got going on with PLTR is a volatility expansion. Let me just zoom out here. Or sorry, zoom in. So we have volatility expansion here, right? What do I mean by that? Well, we had contraction back in July. So our outer volatility bands are converging. Broader context, uptrend. Looking at static support, right? So here we had prior resistance, pullback, breakout. Right? So this has some degree of greater than average risk of a short-term pullback, or it could just blow right off, because that kind of happened intraday yesterday. We had open, we had intraday pullback into level of support, and then bullish reverse intraday reversal with bullish closed near the high of the range. So today we had a gap lower in the stock, but we got a bullish close. But if I clear all this out now, going back to volatility expansion, what's happening here is we're getting volatility expansion. So again, this is covered more extensively in past weekly sessions. Look at the range of these candles from July. Then look what happens. They get wider. So we're volatility expansion, looking at the high-low range of the candle time frame. And then we've got price trailing a 2 standard deviation move to the upside, volatility expansion. So outer volatility bands are diverging. They're diverging significantly in conjunction with a simultaneous move to the upside, buy signal off of support. Okay. So I don't think, it doesn't look like we have any divergence right now. So absence of divergence, actually, this is I didn't mention this, but what happens when there's no divergence? Then we again default to the other variables. So absence of divergence does not negate a trade opportunity, because there is no divergence to trade against. So we defer to the other variables. So that's how we would handle that. And so there's no bearish divergence, and we've got a strong bullish momentum move with volatility expansion and buy signal off this static support level. Let me, before we get out of this, also quickly zoom out and point something out here. So if we go way back, this support level becomes even more apparent. To see from back here, we're going all the way back to 2021, May. Okay. And then we've got resistance. We do have resistance up here that we need to keep an eye on. It's kind of a range. Okay, so this is, on a bullish buy signal here, a potential profit-taking range if that area is encountered. Okay. All right, got time for a couple more.
William asked for Adobe.
All right, let's take a look at Adobe. All right. Let's see, did we get today's? Okay, looks like our updates may be completed. Okay, so Adobe. Full screen here. Actually, I was going to go back because we have a pending buy signal. Pending entry 553.39. All right. So and this is an exercise, regardless of chart time frame. I think I've mentioned this before, but an exercise I do anytime like I start my trade analysis, start quite zoomed out, on a daily chart, definitely at least a year, often 2, 3, maybe even more years depending on the circumstance. But so I'm very zoomed out here, going back all the way to into 2020. And that's important because if I hadn't zoomed out back into 2020, beginning of 2021, I would have missed this whole significant level from way back here from years ago, right? And so it always helps to really zoom out. But look at this strong resistance with multiple sell signals off this level. Well, years later, it was encountered again, and Adobe sold off from that level. Not only did it sell off from that level, it nearly came down into the lower range level of that range as well. But when it finally broke in July, let's now zoom in. Yeah, there's that level again. It's kind of right around 520 roughly. When it broke, what happened? Retest and subsequent rotation higher, right? So buy signal comes in. Well, not my favorite buy signal. If the buy signal was back here, I would have liked it better. So while it's still pending, it hasn't triggered. Price would need to come up to our pending entries 553.39. So it would have to come up roughly. It's going to be hard to get my cursor right on it, but right in here above the high from yesterday and Friday of last week. Then maybe it has some room to run. Let's see. So this is where I really need to keep a close eye on resistance because this is a directional bullish signal. All right. Let's actually just look at this level. All right. So interesting. Look at this. So see this from back in October of 2021. We had so there was a breakout back in like April, May. Retest of the level, another strong leg to the upside. Broke to the downside at the advent of the bear market last year. Now we're back up retesting levels that were seen at the beginning of 2022 when the bear market set in. So this buy signal could be kind of an interesting one if Adobe can break through, because this level is very, very strong. In fact, when I see something like this, what I'm going to do is go into my chart and look at what the actual price low back here was. It was right around that half century mark, 550, but the low on October 4th, 2021 was 552.14. So closed today, August 1st, 549.10. We are right up at this resistance level. So if that can break, that could create a really nice bullish signal, trade opportunity. But when I see a significant swing point like this, I want to be careful of false breakouts. So how can I trade this pending buy signal without just aggressively jumping in at the suggested entry? Well, this is where like the FOMO mentality comes into trading. Like most people are going to want, be afraid of missing the move, because what could happen is it could blow straight through to the upside and then we don't ever have an opportunity if we miss that entry to get in. But there's, like everything in trading, a trade-off to that, to being patient. So we can wait for a potential breakout and even a triggered entry at that suggested entry price that we just looked at. And if and when that occurs, wait for pullback opportunities into, because we now know this is a very strong level right around 550. So if we break through it, to avoid getting trapped in a false breakout and then having another sell-off, because look at, some of the bearish price action historically from this level, and wait for the pullback and then the subsequent reversal to the upside. Much higher probability, safer approach, in my opinion, than just taking the buy signal breakout here. So this signal could end up being very, very nice bullish signal on Adobe, but not one that I would take the more risk averse approach and not trade the immediate breakout, wait for a potential breakout to the upside and then a retest of this currently resistance level. It's still resistance. It is not broken, remember. Close on Adobe today, 549.10. Well, I just looked at the low here that I'm taking into consideration for this level, October 4th, 2021, 552.14. I want to see a bullish close well above that level, maybe multiple bullish closes, a pullback into this level, and then followed by a rotation higher. So this is where watch lists become critical. So I can add this, and in fact, I'm going to add it to my watch list. Okay, so oops, I just need to. I've got filters on here. No filter. No filter. No filter. There it is. Okay, so I'm just going to get my Jeff's watch list. Ah, shoot. Needed to go back to the scanner. All right. I'm just going to drag that in my watch list. So didn't drag in. Okay, so now I've got Adobe in my watch list because the way that I just described could take some time to play out. So using a watch list and keeping a note, if you have a notepad or whatever, track of these things is really important. And it kind of automatically helps pace yourself on these entries and stuff, keeping track so you don't, rush in. It kind of keeps you accountable for making sure things are, your trade plan is being followed. So I use these watch lists. So I'm going to add Adobe to this because if we get the breakout and we get a pullback, this might be a nice bullish opportunity for me to keep an eye on. Let's take one more.
All right, let's see. Jose wants to see FUBO.
Is that Fubo TV? Yeah. All right. Yeah, this stock's obviously gotten pummeled. Just curious to see where. I think I have a friend that has Fubo TV. He likes it, but okay, so this stock was trading, where did it hit 62.29. It's trading down at 331 a share. I would hope nobody would buy and hold this stock. It's already been killed. But as it relates to short-term trading, which is I'm guessing why we want to look at this. All right. So this is kind of what I was talking about on Adobe. Okay. So there was a buy signal back here. This is a little different than Adobe because this buy signal really did occur into resistance. Okay, this level that I just drew. So prior support here, resistance, oops, support, resistance, resistance, okay, buy signal, breakout. So if I had been aggressive with this buy signal, it could have been a nice opportunity. But notice the resistance breakout and support retracement. Yeah, these are what I like. So now what's happening? Well, there's a pending buy signal. Let me just make sure this pulled up today's data. Yeah, August 1st. So there's a pending buy signal from yesterday. Hasn't triggered yet. Okay. So our pending entry is 341. All right. So it's going to be above the high of today's candle. Let me try that a little bit better. Let me zoom in actually, because this is hard to see. Okay. So roughly right there. All right. So does it meet the criteria? Well, I don't see any bullish divergence, but we do have volatility expansion, almost, not quite. We didn't get it down here. We still got contraction on the lower volatility band, but we've got it on the upper. We did have a resistance breakout, pullback, close higher, dynamic support, center band, buy signal. So it meets most of the criteria, but it still hasn't hit the entry price. So if it does come up and hit the entry price, I need to, really need to make sure I'm not trading into resistance. And to me, this would be a good resistance breakout signal potentially if we get a follow through into the entry price. But there is some overhead resistance that I want to be very aware of. Particularly, it looks like around 360 roughly. So there's not a huge potential move before I encounter more significant resistance here. But yeah, it could be. I mean, the stocks just gotten pummeled, so it could be good for like a short-term strategy, but not, in my opinion, for a longer-term one. All right, well, those are great ones to take a look at tonight. Appreciate everybody suggesting those. If we didn't get to yours this week, make sure to bring it back for next week. And we'll go ahead and wrap up with any final questions for the night.
Let's see. There was a question about the new data provider. Will it be real time?
Yeah, so we're checking in with our tech team this week to see what the status is of the transition, but it should be, we anticipate probably in the next couple of weeks. We just have to wrap up some testing, but it's going to be real-time data. We have real-time data available now with our broker integration. So if you use one of the brokers that we offer for Zillion, you can go and integrate your account and trade out of the Zillion platform with real-time data, et cetera. But if you don't do broker integration, that real-time data is going to be available to everybody for particular markets. So if you want like specialized real-time data for like futures markets, forex markets, et cetera, we'll have that available as well. You'll need to reach out to us so we can work with you to activate that. But there will be a default real-time data offering. Like, I don't want to quote anything or promise anything, but we'll have that available on the website. So it'll obviously be like your major US equities and things like that. So yeah, you'll be able to get real-time data, real-time charting, intraday charting. So, currently we're defaulted to daily charts on Zillion. That's now going to transition to intraday charting timeframes. So we're very excited, but we'll send out an announcement as it gets closer. But we anticipate once the testing, completes sometime in the next few weeks, probably.
Be awesome. That'd be sweet. Yeah, that's all I got, really.
All right.
Most of them in the chat, so I think we're good. Barbara said
Cool.
thanks. Great insight as always.
Oh, thanks, Barbara. Appreciate that, and thanks to all of you for the great interactive session. I hope you got a lot out of it, and we will meet again next Tuesday. So there isn't any foreseeable travel coming up here for the team. So we should have a pretty regular schedule here moving forward for our normal Tuesday 7 p.m. Eastern time slot. So we'll plan on seeing you guys all back next Tuesday evening, and wish you the best in the markets for the remainder of the week and beyond. We'll see you guys next Tuesday. Take care.